A few videos back, we talked about coming into alt season, and we were here. It happened a little quicker than we thought. And how's a good way to find like potential plays that are good? I like to look at consolidation after drops into support that start to platform and get ready to ramp. All this in the middle here for several months. You can kind of skip that if you don't want to try to hit the little pops. What you're really after is when it starts to finish bottoming out and then you get some sideways, some time to see that it's doing that and not just breaking down, that it's finding a bottom and putting in a floor. As it starts to claim and rise, you start to see that trend change from just all the way sideways to starting to go like this, right? So as that starts to put in higher lows, you want to start to think about possibly getting long into breaking over. And it's possible it can reject there. It can also be a good short sometimes, but you have to look at it on that day when it's actually happening. And you want to start to ride that breakout. You want to be present for that trade. You don't really want to just put it on and go to work and walk away. You want to watch it breaking out on the day. And you just kind of scan for charts like this. And this is kind of what we're looking at. Understanding market structure. That's what we're just looking at right there. Phase 1.1 to 2 to 3. That's where the floor is happening. And that's happened after, a drop. So after a drop, it's went through its phase and its cycle. It's going back to phase 1.1. It's finishing phase 4.3. Okay. It's finishing up selling off. It's finishing up people taking profits and shorts completing their short down into here. And then 4.3 turns back into 1.1. So now you've got shorts starting to cover to help put in a floor. They're buying. You have longs that are seeing that dip no longer really going any lower because shorts are starting to absorb anything going lower for any more sell-off. At that point, you've got whales starting to buy, smart money starting to buy, and people starting to get back in for the next rise. That money can sit dead for a long time if you're not a big trader. It's easier to come by in phase 2.1 to 2.2 and just catching that last breakout that goes real fast. Okay? Shorts, crescendo coming down, bottom for a long time, and then starting to rise versus, this is what was happening. You're not really looking for that. You're looking for once it stops doing that. That could be this short or it could be this long. You just want to keep a group of tickers that you're watching and watch every day for them starting to pick up some percentages, maybe 2%, 10%, 20%. As that starts to happen, that's where you want to place your money on a fast trade. And that coincides with this kind of market cycle and with what we're looking at with maybe like cup and handle. Cup and handle is one of my favorite plays. So that's kind of what we're looking at today as a cup and handle, which starts around phase, 2.2, where it's come down on a dip, it's made a floor, and it's going to take back off. And as you can see, this is the same exact chart we just looked at. In the middle over there, 3.3 starts to go into 4.3, wash out, start over again at 1.1. You want to wait until that's done its thing and put a floor in, and then make sure that it's not just going to make another lower low, but it's actually flooring. That's kind of how I look at trades and how I decide where I want to place my money. I like a lot of cup and handle. That's my favorite trade probably if I'm going to long, and I want to wait until the right hand side starts to climb, and then my risk is lowest right there. The earlier you go, the more risk you put on because you're not quite sure if it's going to break out. And also trading underneath, it could also just reject entirely. That's also a good spot to watch for a short or for a breakover. If you want to wait for the breakover until it comes back and tests and then takes off, that's the lowest risk, and it's also the least returns because you've given up 10, 20% sometimes for it to pop over and pull back. That's just kind of like how I look at things and where you can find a good trade. Cup and handle, excellent trade. It goes along with the waves. You can kind of see where you're at. It gives you a little bit of understanding by reading that book. You can jump in and get it for free out of the room, and you can just go through and just compare chart patterns like that. And there we go again. So 4.3 down to 1.1, 1.2, 1.3, 2.1, 2.2, all the way into where it starts to pull back, makes into this is a 3 area. This gets into where it starts to break down, 3.3, 4.1, 4.2, 4.3, and then it starts to floor again. Now that can go all the way down, but now you've got support and res to look at to see where it's flooring at. So now not only has it floored, it's also platformed. And if you look at the volume like I like to look at, there you go. You had an idea that it was starting to climb out. The second you saw volume coming in like that, get long. That's where you want to get long at because that's when it's going to start to break through other overhead resistances. That's not going to be a short day with that kind of volume. If it started to pop like this on this kind of volume, that's a short day. It's going to start to go that way, and then the candle is going to break super fast and volume will start to add like there. You'll notice it, but that's something you have to really zoom in and look at once that day starts. That's how you pick your targets. That's how you trade cup and handle. That's how you find them. Thanks for watching. Good luck. Happy trading.